Interest rates are rising in the UK and across the water in America. The Bank of England have put their rates up by 0.25% to 1%, and the Federal Reserve have hiked rates 0.5%, the highest they've done so for 22 years, also now to 1%. So the Fed are effectively doubling their interest rates, and we are putting up in the UK by 50%. And this comes after the Fed and the Bank of England said they need to do something about inflation, which previously they said was transitory, temporary, it's not going to last very long. Now they're hiking up interest rates to try and curb it. Now, of course, they're blaming Russia and the war and that sort of thing, but we know that inflation's been brewing for quite some time, for at least 1 or 2 years now, and prices have been going up everywhere. So the Bank of England say that inflation will reach 10% by the end of the year, and that the economy will shrink next year. Well, that means it's going to go into recession. This is what I've been saying all along. In fact, it's already starting to slow down. We had a slowdown in the US in the first quarter of this year. So things are already starting to slow down. So that's the news here. The Monetary Policy Committee met here, and 3 of the members wanted to put up rates by 0.5% because they thought 0.25% wouldn't be enough. Now, admittedly, 0.25% doesn't make a lot of difference to people. The majority of people are probably on a fixed rate mortgage. It's not going to change the world, but if rates continue to creep up, then it will affect the mortgage market and the housing market. There's no doubt about it. The stock market doesn't seem to mind. They've carried on going up this morning, and they don't seem bothered. Maybe they would be bothered if rates were hiked a bit more, but they don't seem overly concerned. So I think the Bank of England Governor Andrew Bailey is right that the economy will shrink maybe before the end of this year. He's also saying that people's incomes have fallen by the highest rate since records began in 1965. This means that people's incomes are falling behind, and then you factor in inflation. It's not much fun for a lot of people. He mentioned, they don't normally do this, but he mentioned a lot of people are struggling. Bills have gone up. Gas and electricity bills could go up again by as much as 40% in the autumn. So they're trying to factor this in, because obviously if bills are going up, and we all need light and heat, and we need to cook and that sort of thing. So that's the first thing we're going to pay for. And that means we'll have less money in our pockets to buy things in shops and go out for meals and go to the theatres and restaurants and that sort of thing, and go on holiday. So the luxury end of the services, I think, will suffer. Now, I've been walking around my area today, and I've seen quite a few shops just closing down, just suddenly disappear. Mostly small businesses, but one was a coffee chain called Cafe Nero, gone. They've been there about 20 years. Another small sort of garage stroke tyre shop, gone. Now this could be because their lease has come up for renewal and they can't pay it anymore. But we are seeing things like pubs disappearing all the time. They become either restaurants and sometimes nurseries, sometimes even places of worship. So, we're seeing signs that things are changing. In London, where you've got the big department stores in Oxford Street, much of the floor space above, because they used to have like 5 or 6 floors of shopping space, now they're turning those into apartments. Some buildings have been ripped down and they're just starting them again. So the look of Oxford Street will change completely. So lots of things are happening. What can you do to try and beat inflation? Well, I gave you some tips last week. I suggest you check those out last week. I gave you 3 tips to beat inflation, which you can follow, but I won't go through them again because you've got them on the podcast last week, which you can find on YouTube, iTunes, and on my website as well, moneytipsdaily.com. So America's put up their rates as well as the Bank of England. They're both at 1% now. Other countries are suffering further. I mean, Turkey, their currency is bombed. They've experienced 70% price rises in Turkey. I know a lot of people are going on holiday to Turkey because the currency is so weak. They say their money, their pounds, dollars, or euros can go quite far in Turkey. So there are countries suffering. There are countries suffering food shortages. The European Union has come out today and said they're banning oil and gas imports, or they want to ban oil and gas imports from Russia completely. But I don't think they'll get full agreement on that, because countries like Hungary and Slovakia totally depend on Russia. They're a landlocked country as well. So I don't think that that's going to go through as it stands. But then you've got this Ursula von der Leyen saying, we've got to do something to help Ukraine and prepare them for joining the European Union. To me, that's almost that's such of warmongering. It's stoking up the fires that almost have caused this conflict. The fact that countries near the Russian border are being encouraged to join NATO and the European Union. Just to explain the history, in the past you had NATO, which is the North Atlantic Treaty Organization, which consisted of America and some of the European countries and Britain, which was supposed to protect against a Russian invasion. And then Russia had taken over what they call the Warsaw Pact countries, all surrounding Russian borders. And they took over Hungary, Czechoslovakia, Poland, and they were basically Russian states. And so they would have their Warsaw Pact forces, and they would kind of face each other, and you had East Germany as part of that as well. And then when that broke up, when the old USSR broke up, there was supposed to be an agreement that there would be disarmament, that the Warsaw Pact would disarm and break up, and that's what they've done. And then these countries then became independent, like Poland, and Czechoslovakia broke up into Slovakia and the Czech Republic, and then you got Yugoslavia, which broke up into several countries. There was a war there before, but now you've got Croatia, you've got Serbia, and a lot of these countries have joined the European Union, and NATO have not really stopped. They've not really disarmed. So the situation with the NATO countries is that they're getting closer and closer to Russia. And now you've got Sweden that wants to join NATO as well. So I don't know. I'm not condoning what Putin has been doing, but trying to get countries like the Ukraine to join the European Union is not going to help calm the situation down. So again, I'm not condoning what Putin's doing, but I think somehow the West has got to realise that Russia gets nervous when you've got countries on their borders that are part of NATO. NATO means that there will be nuclear arms and troops placed there, stationed there on that soil, and that will be facing Russian cities and Moscow and this sort of. So it's a difficult situation. So I think Ursula von der Leyen needs to sort of back off and keep quiet, really, because in any case she's the commissioner, but it's the countries in the European Union who've got to decide these things. And personally, I'm glad that we are out of that club, that European Union, because they've gone far beyond just a common market where you can trade with each other. They now want to become a super state with an army and with their own foreign envoys and this sort of thing, their own ambassador. So I'm personally glad we're out of that. I know we're having problems in this country in many ways, but I think we'll come out of it stronger in the long run. So there you go. It's quite serious, the problems that are coming our way. So now there's never been a better time to prepare yourself to become financially educated, to become financially aware of what's going on. It's not just understanding the figures, but it's you preparing for what could be a downturn. What would you do if you lost your job? What would you do if interest rates kept going up? All these things are part of being financially educated, and it's not taught in schools and universities. So what I do, I'm offering a free money masterclass next Wednesday, 7 p.m. You can register with a link below, and great. We can, and it'll be 7 o'clock. Then you'll be invited with a link to come and join me on Zoom with a small group of people, and we can go through what I think you can do to really get control of your money, to learn how to become financially free, and learn a bit more about how to invest in assets such as property and the stock market and other assets that will hold their value against inflation. Because if you're putting your money in a bank, your money is falling behind rapidly with inflation. Imagine inflation at 10% and you're getting less than 1%, almost zero. Then that means £1,000 in your bank will buy you the equivalent of £900 in a year's time. So you take it out of the bank, you try and buy something, everything's gone up. And then the next year, what is it? Is it 800? No, it's not 800. It's less than 800 because it's 10% compounding. So within about 7 years, the value of that money is halved in value because you're not earning any money in the bank. In fact, some of the banks here refuse to put up their rates for savers even after 2 previous interest rate rises. I went in there and confronted them, and she just sort of said, well, in fact, that branch is closing down anyway, so there won't even be anyone to talk to soon. You'll have to get on the phone and wait half an hour to get through to a call centre on the other side of the world. That's my rant there. So there's never been a better time to really get educated. You're not going to save your way to a secure retirement or save your way to get out of the rat race by putting your money in the bank. It's got to be invested, and you need to know how to invest your money so you're not relying just on financial advisors. So think about that. Join me for my free money masterclass next Wednesday, 7 p.m. and I will see you there. Great to speak to you again, and have a great day. Have a great weekend. You might be listening to this on a Friday or a Thursday, but have a great weekend, and I will speak to you again soon. Thank you.